Tamikaze here talking about picking the perfect dividend stock. A lot of people just want to passive invest and they want a guaranteed return over time and they want to know how to pick a dividend stock. So I wanted to make a quick video on how to pick a dividend stock and why it's important to pick one with a decent dividend, a company that's not going to go anywhere, and high upside. So typically you'll see high dividends on stocks that have lost a lot of value due to poor earnings or something like that, and you don't want to chase those. What you want to chase are companies that have a history of raising their dividends, a history of a dependable stock price, and then a history of a stable trading range. So, one that I've always been a fan of, and I'll talk about a couple here, is AT&T. AT&T, if you look down here, has a 7% dividend, which is a fairly high dividend. A lot of stocks only have a 1 to 3% dividend. So, for instance, like Microsoft, I believe is like 1.5%. We can actually look at Microsoft. So, Microsoft being, yeah, it's at 1% right now because it's just gone crazy. So, typically, AT&T trades in a nice range, has a nice stable 7% dividend, and also has upside so you can profit off the dividend and off the share price. So things you have to consider is what's my upside on the stock, what's my guaranteed return on my dividend, and then you could figure out your total return on that. So you have a high upside here, a trading range up to 45 and a low downside of 21. So we're in the lower half of the trading range and we have a good dividend that can pay out. So this is one way you can earn money by investing in shares. So this will pay you money. You never have to save the stock. And then you can also sell covered calls every week or every month to make additional money on the stock as well. And then you can also sign up for stock lending programs, which I will make a separate video out, and also earn guaranteed interest returns for lending out those shares without the risk of your dividend. If you lend out the shares, you still get the dividend. So let's look at a couple more here. IRM is a REIT based stock, so it's a retail investment trust. So basically, what this is it has a high dividend, 8%. So and it has a high trading range of the $42 range and a low trading range in the 21 to 17 to 21, but it hasn't been back there since the 2009 crash. So that was the housing market financial crash. And so typically, you could see it's in this downtrend, but it still has the upside here. So you can see there is a downtrend there, but that still gives us upside with our shares, and we're still getting an 8%, 8.2% dividend, which is a healthy guaranteed dividend. IRM is the best REIT out there. It is the most stable with the highest future outlook. So another good one would be Coca-Cola. And typically, you want to diversify your investment funds or your dividends across different industries. So AT&T would be like telecom, Coca-Cola would be consumer brand, IRM would be a retail one. And you can see Coca-Cola's caught on fire recently. It's got a 3.2% dividend, so lower on the dividend side, but has good upside and good stability. So you can see over time, Coca-Cola has a strong uptrend, and you can be pretty sure you aren't going to lose money on the shares while still collecting a decent dividend. And then you can do the other ways of making money on the shares as well. So those are a couple of really good ones that I like. Uh, there are some other energy stocks like CVX or Exxon Mobil. So CVX has a 6.3% dividend, and Exxon Mobil has an 8.9% dividend, but they are at risk of potentially losing the dividend and reducing it based on energy pricing going down. So this is something that a lot of people are talking about are these oil stocks right now that have just been hammered by COVID as demand increases, these could be good value plays with good dividends and good upside. So this is definitely something you would want to consider. I also like EPD, which they own pipelines. So EPD has a 10.3% dividend and a giant upside. So EPD and XOM are probably my two favorite upside dividend stocks. CVS would be a good healthcare dividend stock. So CVS has a 3.32, but has an upside in the $100. And the other thing is CVS is earning extra money because it's a healthcare stock in the COVID world. So I would wait for this trend to reverse before getting in. Do your charting and pick out your entry points. But I just wanted to talk about some different dividend stocks that I personally like, that you can add to your portfolio. And then once you create your dividend portfolio, pick maybe 10 to 15 different diversified dividend stocks across the 12 sectors. Then you can start involving the other strategies to make additional money instead of just collecting the dividend. Then you can collect money on share prices rising as well. And you can also collect money on selling covered calls. And you can also collect money on lending those shares out to short sellers with a stock lending program to earn an extra 1 or 2% uh, every month, and earn 12% a year just by lending the shares out. Plus, you get your 7 to 10% dividend, and then you sell your covered calls. You can make 30 to 40% on dividend stocks annually. It can be done. It's just no one ever talks about it because it's not something people. It's not sexy. It's not. It's not making 500% on Tesla, but it's safe. And over time, you can take a small portfolio and then turn it into a giant portfolio. So if you're in your 20s or 30s and you're looking to get long-term wealth and a good retirement portfolio, it's a great option. Even if you're in your 40s, 50s, and 60s and you want stable income, you can either take those dividends as income or you can reinvest it to grow that portfolio even more if you don't need it. So, this is something I wanted to talk about. Hope you enjoyed it and have a great week.